morning students. Again I am here back with the new topic, that is revaluation account. Now here I have already given written on the board. What do you mean by revaluation? Now revaluation means to revaluate value which is been again taken for it, right? The value which was present value was there, again it was taken and again it is been revalued. That means the new value has been the book value. I am given you the definition for the revaluation, that is book value of assets and liabilities recorded in the books of the partnership firm when brought at present value. You must have seen that your balance sheet and adjustment both have written over here, as we have already seen there in the chapter number 2 of accountancy. In standard 11th also, in the final account chapter, you had the adjustments and balance sheet, everything was there. In the same way here, now this will be the question. Now how can we know that there is an increase and decrease in the value of assets? Basically the summation of revaluation means an increase and decrease in the valuation of assets. Here the value is that the question is there 5 lakhs, but according to the adjustment the value of the land is 7 lakhs, right? So you have to take, you don't have to do anything, you have to just only take the difference. Only the difference you have to mark it in the revaluation account. That I am going to take you to that also, the revaluation topic, that what things you are going to write it over it, right? So the land, now for example the value in adjustment, the value of the land is 7 lakhs. And here in the question the asset, land is 5 lakhs. The difference will be 2 lakhs, right? Difference will be 2 lakhs. Again, building is 8 lakh in the question, and the value of the building is 6 lakhs. So basically you can just know from it that the current situation was 8 lakh and the value of the building is 6 lakh. That means it has been decreased. It has been totally been decreased. Here it was from 5 lakhs to 7 lakh, it is being increased. From building 8 lakhs to 6 lakhs, it is being decreased. That means 2 lakhs has been decreased. Furniture, it is already given to you 50,000, and here in the adjustments the value of the furniture is 1 lakh. That means again it has been increased. See, are you knowing the difference between that? Yes, can you know the as per the revaluation? Now what all the we are doing the revaluation, we are revaluating the assets. 5 lakh is there and now 7 lakh is there, so 2 lakh difference has been, and that is known as revaluation, right? So bills receivable is there, as nothing is there in the adjustment, so keep it as it is. We are going to do the sums at that point of time. I will make you to understand that what you are going to do it. Now coming to the liabilities part. Liabilities part, here all the partners have been given to you. Here it is 50,000, 50,000 and 50,000, so that is 1 lakh 50,000. No need to touch over it over here. The creditors are 1 lakh. Creditors are 1 lakh, and here it is given to the creditors 10,000 are not paid. Creditors 10,000 are not paid. This means sometimes you will be saying that sir, 5 lakh is there and here 7 lakh is there. So 5, the difference is 2 lakhs. But now here difference again 60,000 and 10,000, so difference will be 50,000. So where you are going to write that 50,000? You will be writing 50,000 in the new balance sheet. But in the revaluation account, I told you only the difference you are going to write it. Difference means 10,000 is not paid. That means in the revaluation account 10,000 only you are going to write over it, right? In the revaluation account, creditors not paid means only 10,000 you are going to write it. Then in the new balance sheet you are going to write it 50,000 over there. That I will make you to clearly understand. Don't be in tension that what sir is going to have it over here. So that is basically the normal thing which I am going to make you to understand over here. This concept, if it is clear, then we can move to the next section, right? Okay, so now we are going to see the revaluation account, how we are going to prepare the revaluation account. It is given in the page number 120 of a textbook, revaluation account. So you can just see the pro forma, it is given to you, particulars rupees, debit and credit, right? Now I told you over there that whenever there is increase in asset, can you see over here, by asset account, increase in asset. That means at that point of time land and building was there, 5 lakh was there and it was 7 lakhs, so 2 lakhs has been increased, so you are going to write on the revaluation account credit side here 2 lakhs, right? By asset account, if it is unrecorded, if assets are not recorded in the question, then you are going to write it over on the revaluation account credit side. That will be in the question, right? Then by accrued income, by prepaid expenses, this both the things it will be in the question, so you don't need to worry that you are going to write it over here only permanently. Only the increase and decrease in the assets and increase and decrease of the liabilities that you are going to write it over here. Now by liabilities, that is decrease in value, right? Just have one thing, that asset increases and liability decreases. That will be on the credit side of revaluation account. That you have to remember over it. That asset increases, that means revaluation account credit side, and liability decreases, that will be revaluation account credit side. This both will come on the revaluation account credit side. Then coming to the debit side, to asset, decrease in asset. Now if the asset decreases, you are going to write it on the revaluation account debit side. To bad debt reserve, that according to the question we are going to post it the figures. I will make you to understand in the question it is there. If nothing is given, just post it the bad debt reserve from the textbook and the question and write it over here. Discount reserve and debtors, that also the same like is like that only. To liabilities, increase in liabilities. Now you can just see the difference. Your asset decreases, then liabilities will be increased. So in the revaluation account, asset increases, you are going to write it over here, and liability increases, you are going to write it over here. At the same point of time, here also asset increase, then revaluation account credit, and liability decreases, then revaluation account credit. That means, can we say that this will be the opposites, right? This will be the opposite. Asset increases and liability increases, both are opposite. Asset decreases and liability decreases, both are opposites. Have you understood this? This concept is clear. That means if there is an increase in asset, you are going to write on the revaluation account credit side. If there is decrease in liability, you are going to write it on the revaluation account credit side. Coming to the debit part, if there is an increase in asset, you are going to write in the decrease in asset, you are going to write on the revaluation account debit side. And if there is an increase in liabilities, you are going to write it on the revaluation account debit side, right? Then coming to the last thing, that is partners. Now if all the things have been written, right? Now this is not new thing for you, as you all know the difference. For example, the total here is more. If the credit side total is more than the debit side total, definitely what will come? Profit. Yes? And if the debit side total is more than the credit side, what will come? Loss. That you all know, that previously also we have done in the chapters, that if the credit side total is more than the debit side, that means all the partners distributing it will be in the profit only. So that partners will be attaining profit. And the vice versa, if the debit side total is more than the credit side, then definitely the loss will occur, and so the distribution of loss will be among the partners only. Have you understood this thing? Now I will just turn off my camera towards over here also, so that you can just see that 5 lakh and how we are going to write it over here. Just focus it over here. Okay, so now the revaluation account, we'll just have a look over it, how we have done it over here. Land is 5 lakh and the value of the land is 7 lakh. So difference will be 2 lakhs. We have written on the revaluation account credit side 2 lakhs. I think so. Light is coming here, so it will not be possible for you to see it properly. But this is 2 lakhs. We have written it on the revaluation account credit side 2 lakh the difference. Again building is there 8 lakh and the value of the building is 6 lakh. So it is decreasing. So if I have written it over here, that is in the revaluation account debit side, building 2 lakhs. Then furniture also it is increasing. Furniture is 50,000 and the value of the furniture is 1 lakh. So it is increasing 50,000. So here again it will come on the revaluation account credit side 50,000. And the last, that is creditors. I told you creditors 10,000 are not paid. That means only in the balance sheet we are going to write it 50,000. But in the revaluation account is decreasing, so it will be written over here by liability in creditors 10,000 that is not paid. We are going to write it over here, right? 10,000 you are going to write it. So in this way, the increase and decrease you are going to write in the revaluation account, and then you are going to make finally whether it is the profit or loss, and then distribute among the partners. Have you understood this very much?